Okay, so today we're going to do a little experiment on understanding risk reward ratios. Two of the keys of trading is capital preservation and risk reward. Capital preservation is pretty much just risking the proper amount per trade, and this will allow us to stay in the game long. So this would extend our time in trading. What's going to push us over the edge and push our account in a positive direction is the power of risk reward ratios. And combining risk reward ratios, the power of risk reward ratios with capital preservation, that's our overall profiting account in the long run. The idea and what trips people up is the sample size. People look at one or two trades and think, oh man, it's a bad strategy. But really, you're supposed to look over a pretty significant sample size, maybe 10, 20 positions, and then look at before you begin to make any kind of analysis, whether it's good or bad. So with that being said, let's dive in a little bit into risk reward and just get the power of it, just to get a better understanding of it. So with this experiment, we're gonna be flipping a coin, 50-50, heads or tails. In this experiment, we're also gonna be exercising the power of risk reward ratios. For every time we get tails, it's +2. For every time we get heads, it's -1. So to give you a correlation, that's as if we're risking 1% per trade and targeting 2%, pretty much a 2% win per trade with our take profit. And just with a 50% win ratio, what would be the outcome of it, or win probability? What will become the outcome of it over a significant sample size? And here's where we're going to see the power 2 to 1. So without any further ado, let's go down. I'm on a web page here. The link is displayed here. If you want to give it a shot yourself, you just scroll down the page. Uh, they have this section here where you could simulate flipping a coin. For our example today, we're going to be flipping 10 times. We're going to do 5 tests, flipping 10 times each time. Uh, and then we're going to see what the outcome is. And I'll just discuss it briefly. So without any further ado, let's get it going. Over here we got the flip count and the number of heads versus tails. I'm going to show you how the spreadsheet is intertied into everything. It's just a pretty much quick calculator that I put together real quick to kind of just display the results for you guys. So here we got 10 random coin flips. 3 of them were heads, 7 were tails. I'm going to input the 7 and I'm going to input the 3. What's going on here is for every 7, every one of those 7, it's adding 2. So it's adding really 14 when you add them together. And the 3 is -1. So so in this particular case, we got 14 minus 3, and that gives you 11. Down here would display red or green, whether the in theory this would be positive 11%. From those 10 trades, positive 11% using the 2 to 1 risk reward ratios. That's passing to me. Failing is if it's below 1. But the idea is you want to see across the 5 tests exactly how many times we pass versus fail. So that's test number 1. Let's do 5 and 5, 50%. Check this out. Very interesting. So even if we won 5 times and lost 5 times, we're even. But profit-wise, we're up 5%. The power of risk reward. is definitely in play right here. So after our next 10 trades, we got a 50-50, and we're up 5%. Because we're winning more when we're winning than we're losing when we're losing. Six heads, four tails. So now we lost more. We lost 6, and we only won 4. Let's see. Let's see how we're looking. Even losing more than we won, we're still profitable. 2%. I'll take that over overall losing week. I'll take that gladly. Next test. Odds reverse. Now we got 4 and 6. Had a better week this week. That's +8. Just with just 60% winners. Last but not least. Same thing. So you can see the power of 2 to 1. 2 to 1. Now, theoretically in this sample here, our probability was 50-50 on each trade. We didn't know which way it was going, up or down, heads or tails. And with the power of risk reward, as long as we're winning more than when we're winning and we lose when we're losing, you can see that it's all green. All green. Now, over a sample of 50 trades, like these are the kind of results that you would like. Like, this is +34. I mean, I don't want to get the hopes too high, but a positive 34% is good in anyone's book. But this is the power of risk reward. So, when we combine that with our probabilities of trading with the trend, just trading with the trend, trading with the bias, in my theory, in my thoughts, in my mind, I'm well over the 50% probability, that a coin flip would serve. So that's pretty much saying that we're going to be, the odds are we're going to be winning more anyway. Winning more, win wise. But with regard to risk reward ratios and accompanying that, with our probability being greater than 50%, say we got a 60% or 70% winning probability, and now we're still doing these 2 to 1s, these numbers can increase significantly and reflect back in our trading account. So just want to keep that in mind if you want to give this a shot yourself. Here's the website. There's also plenty of other websites where you could just do a coin flip. I pretty much like this one because it counts the numbers of flips and the numbers of heads versus tails. It kind of just lays all that out for you. So I like this one, but there's other ones where you could just, flip the coin and count it yourself and different things. But, take a look into it. And then, if it makes sense to you, apply it to your trading. I apply it to mine. And, I'm pretty happy. I'm pretty happy at the moment. So, to say the least. Because, it's worry-free. It's worry-free. It makes it easier to follow your trading plan when you don't have to worry about, all these other elements. So now you got risk and reward on your side, got capital preservation on your side. You're in the right position. So with that, this is L signing off. Hope you found some value in this quick video. And happy trading and happy investing.